Hello, tax fans. In the first of this series on what the budget may have in store and what we might expect from Starmer and Reeves's self-titled paying budget. In that first episode, we looked at potential changes that will cause no pain, or some of those changes that might hurt a little bit. But that's nothing. We're not interested in pain-free. We want to turn up the thumb screws.
The Spanish Inquisition.
And we want to see, if we recall from the first part, the Wong Baker scale with a little sort of smiley faced emojis on there. We're moving up that scale now to provisions that might hurt a little bit more. I think one area where we might see a hurts a little bit more approach could be a bit of a culling of some of the tax reliefs that we've all come to know and love over the years. After all, if we simply cull, reduce, emasculate some reliefs, we can say we haven't raised taxes, can't we? So we need to be careful about that particular sleight of hand. So let's have a look at the first relief, which might be on the chopping block, and that is business property relief. Some people call it business relief. I call it business property relief. It's what it says in legislation. It's a hill I am prepared to die on, okay? But what is business property relief? Well, basically, I think if there was a policy intention behind it, it really is to stop a family business when it's passed on to the next generation. It is to prevent effectively the government taking a 40% bite out of that business as inheritance tax. Clearly, that could have a devastating and certainly a very adverse impact on that business. So I think the policy is, you know what, it's for the greater good. We keep these businesses employing people and generating wealth. And I think that's, broadly, most people would admit that's a good thing. But the FT, a month or two ago, reported that 68 estates, all with business assets worth more than 5 million, claimed BPR on estates totaling 1.8 billion. And that for 2020. 2021 was comfortably the majority of all business property relief claimed. And that's likely to because those estates will have stakes in very high value but unquoted trading businesses, and those business interests will qualify for relief at 100%. So some who sit on the left of the spectrum, let's say, may feel that is bad enough. I personally still think that's the type of business which would get the relief. But some on the left might think, well, it's bad enough, tax relief only benefiting the richest in society. Ain't that always the truth? But I think for those who are frothy of mouth already, the frothing is only going to get worse, because the thing is, business property relief isn't simply restricted to shares or other interests in family businesses in which the shareholders may be active, very, very much connected to the business. The relief also can apply to baskets of shares in companies which are listed on the alternative investment market. Yes, I can hear you saying, but Andy, didn't you say only apply to unquoted shares? Well, rather oddly, if you are quoted on the alternative investment market, that doesn't count as being quoted for business property relief purposes. Don't know why, but that is the rule. So in the absence of any other requirements, it would be possible for a retired person, let's call her Mrs. Miggins, it would be possible for her to invest, say, £1 million of her cold hard cash straight from her post office savings account, and she could invest that in a basket of AIM shares, probably an off-the-shelf portfolio. After 2 years, sometimes less, but after 2 years, Mrs. Miggins' IHT liability on the million, so £400,000, would be totally removed. She doesn't have to have any involvement in the business. She just has to go along to the financial advisor and get he or she to select the right investment product. It's important to note other requirements apply. So not all AIM companies will qualify, because some companies on AIM will be, for example, property investment companies, and they are not trading for these purposes. So for me personally, it's a rather strange outcome. Really, somebody can obtain an incredibly attractive business tax relief, but don't really have any material involvement in a business. Of course, there are arguments potentially for it, that ultimately it is a reward for investing in volatile companies, growth companies. But does the AIM market really deserve to benefit from that cheap money? I don't know. I think the jury's out on that one. I think again, a fair comparison would be, or an interesting comparison anyway, would be to compare the case of Mrs. Miggins that I've just spoken about, who gets BPR relief, on as I say, just cold hard cash really, against those who have made a living from being professional landlords, who, amongst other things, in recent years have found they are now taxed on phantom profits, and it seems a slightly odd comparison, that you can get very valuable IHT relief on very passive investment, yet a landlord who could conceivably be very active and run it as a proper business finds themselves, as I say, taxed on phantom profits. But this is UK's tax, so we shouldn't be surprised if there are batshit crazy results. So now I want to visit business asset disposal relief, BADR, the tax relief formerly known as entrepreneurs relief. A much better name. Business asset disposal relief isn't particularly sexy, is it? But I don't get to name these things. So this is a relief that generally applies to material disposals of trading companies. So that could be shares in a trading company, or it could be interests in a business. So where you are a partner, perhaps in a business, or you are a good old-fashioned sole trader. Couple of years ago, you may be aware, you may not be aware, that business asset disposal relief was whittled down to its bare bones by the government in the budget. There used to be a lifetime cap of 10 million, so you get a 10% tax rate on lifetime gains of up to 10 million. That was cleaved into a £1 million limit. So we've had a massive decrease in the total value of that relief. There are also tighter restrictions placed upon other qualifying conditions as well, to make it harder to qualify. So as I say, a mere husk of a relief these days. Prior to those changes, entrepreneurs relief, as it was, cost the government £2.7 billion per year, which sounds a lot of money, but was way less than the relief it replaced. Taper relief, but obviously it's still considered too much. So the relief, as I say, was whittled down. More recent figures suggest that this more insipid version costs about 1.1 billion a year, but that does include another not particularly common relief, it has to be said, called investors relief. But the likelihood is really that business asset disposal relief is costing about £1 billion a year. So the government has really scaled back. So you're looking at probably, the costs of BADR entrepreneurs relief has gone down from probably near 10 billion a year down to 1 billion a year. So the government really isn't being particularly generous with that relief anymore, despite what people may be telling you. So, I think generally speaking, entrepreneurs tend to be fairly chilled out if they're paying 10% on capital gains. Funny enough, people find that 10% tax is about right. But what if we do scale back a little bit more on the relief? Is there a danger that if we do completely curtail the relief, that there's more sport in somebody who has a gain of looking at other ways of reducing tax, so becoming non-resident, something like that, for instance? But even if there is, should we care? Well, before we make a decision, let's look at some of the facts. And I think we can pull up an image of some of the stats around these reliefs. So I think unlike, as we've seen in the previous part, unlike an increase simply in the capital gains tax rate, we do get actual positive returns from removing the benefit of BADR at all levels. So if we were to have the benefit, so bring down the effective rate rather than 10% becomes 15%, then we would raise something like 1.1 billion over 3 years. A full removal would generate 1.6 billion over the same period. In the grand scheme of things, is it a massive increase? No, it's not. But certainly it is much more effective than raising the capital gains tax rate, other than raising the CGT rate at very, very low levels. As we've seen, if you start putting material percentage points on the capital gains tax rate, it is counterproductive and doesn't raise any revenue. So the penultimate relief I want to look at is R&D relief, research and development tax relief. As I said, there's been a big purge on business asset disposal relief, entrepreneurs relief in recent years, because it was seen as being expensive, but also people had concluded that it was largely irrelevant at the time an entrepreneur was deciding to establish a business. It wasn't at the forefront of their mind that they were going to pay a 10% rate. They were going to start the business. Anyway, and I think that makes sense. I don't think anybody creates a business because they are going to pay 10% rather than 20% or rather than 25% if they ever get around to selling it. Now, that is my personal view. But I think if we start looking at R&D relief, those two yardsticks, so the expense and whether it really does act as an incentive, I think make R&D susceptible for those exact same reasons. Now, historically, what I am suggesting here would be almost blasphemous, because R&D has made everybody so warm and fuzzy inside. R&D, in tax terms, is like a wide-eyed puppy staring at you through those big eyes. But as I say, if we apply the same rationale that got business asset disposal relief hacked to pieces, then R&D doesn't shape up. If we look at the 2021-22 tax year, the cost, or as the government describes it, the support of the R&D tax scheme was £7.6 billion. So more than entrepreneurs relief, and comfortably so, much, much more than it is now. So it's 7 times more than the current figure for business asset disposal relief. There have been changes recently, particularly for the amount of relief that SMEs can claim. So that figure is likely to be smaller in recent years. The question is, does providing a very, very generous relief in SME these days can essentially claim 186% of their costs? Used to be 230%. It's been brought down. But does that relief incentivize people to innovate, to create those advances in science and technology which is required to claim relief? I would say no, it doesn't. I would say these businesses were already going to do that. The relief may make them more in tune to actually claiming the relief, but I don't think it really drives the actual activity at all. So much like entrepreneurs relief or business asset disposal relief, R&D has some other, I think, shady factors as well. First and foremost, historically there have been a lot of claims and management companies operating and charging contingent fees. So a lot of that relief has been ending up in the hands of advisors. I think that is another aggravating factor when you compare it to business asset disposal relief. And we have seen a tightening of the strings recently. I think in response to that, HMRC typically does this, it has to be said. It follows an arc which goes from the sublime to the ridiculous, and now is over-policing claims in all likelihood, and making a right dog's dinner of enforcing the regime. It claims that an extraordinary 1.1 billion is claimed in error or fraud, so the same figure that is actually the cost for business asset disposal relief, just by coincidence. So yeah, we've seen very, very recently media reports of serious allegations of fraud against providers. There was a raid on a particular provider, and of course these allegations and they deserve their day in court and due process and all that, but if they are found to have been acting in a nefarious manner, then they should be brought to book. But I don't think that changes the point that, again, if you are looking to axe a tax relief, and as an argument it's expensive, it doesn't really incentivize innovation, and it seems to be a hotbed of fraud. Now, that seems to be the perfect combination of ingredients for there to be a real sort of curtailing of the relief. So it's not one that I think is getting mentioned a great deal, but it could be a nice little earner for Rachel Reeves, and one way she might get the surgical scalpel out. So the final relief, more of a smorgasbord of relief really in this one, is pensions tax relief. And it's become a bit of an annual tradition that we speculate that the government will be removing or reducing the tax relief on pension contributions. The British Empire was founded on such speculation, but could the stopped clock hypothesis finally ring true? So what might this look like? Well, rather than allowing tax relief at the marginal rate, so if you're a basic rate taxpayer, you get basic rate relief on your contributions. If you're a higher rate taxpayer, again, you get that higher relief. Could a unified rate of relief apply? It feels pretty much like that will be squeezing the middle. I think, generally speaking, the very wealthy high earners have a much reduced headroom for tax relief pension contributions. Anyway, if we look at the Scrooge-like annual allowance for such persons, so it's not as if you are blocking an open-ended check for those on mega money. They're already curtailed in a slightly different form. I think more likely is that there's been some speculation recently that Reeves might levy employer NICs on employer pension contributions. Now, that seems like a pretty small change, but it would raise a huge amount of money. On an annual basis, it would more than cover the £22 billion black hole. So although sticking in NICs and employer NICs on pension contributions feel a little bit like they're breaking the manifesto. You remember they said they wouldn't increase NICs, but is putting NICs on something that doesn't bear NICs at the moment, is that really increasing NICs? There's a fudge there, isn't it? And the value, the revenue it'll raise, it must be worth the pain that they may get and the backlash they might get as a result. So I think that might be something that we see. The final element in the pensions sort of stack where we could see some action is on the tax-free lump sum. At the moment, you can get 25% of the lifetime allowance. The lifetime allowance was removed for most purposes, but it is still used for calculating the tax-free lump sum. And I think, broadly speaking, you get about £250,000, something like that, 25% of the standard lifetime allowance. You may have an increased availability of the lifetime allowance, but could that be reduced to £100,000? To raise a bit of tax? Again, it just doesn't feel like it's something they'll go for. It's really squeezing the middle. I think it will affect a lot of the public sector workers as well. So I don't think that one will happen. But somewhere in there, wealthy retirees or people getting to retirement, might be a little bit of pain in there somewhere. So to conclude, there we have it. That hurts a little bit more in our budget of pain. Surely that must be enough pain for you guys now? No? So you're sadists. I get it. I'm with you. Well, there's plenty more potential pain in the Starmer Reeves Hurt Locker. If you can bear to watch it, maybe watch it from behind the sofa, then tune in to part 3, which will materialize soon. However, for now, if you've got any comments, just pop them in the comments below. I'd love to hear from you. Love to answer any questions or address any comments you make. And obviously, don't forget to subscribe for more tax-related agony. But for now, we look forward to seeing you later. Thank you.